Hi, I'm Jason Jessup. I'm the CEO of Magna Mining. Magna is a Sudbury-focused nickel-copper PGM exploration development company, and we have two significant assets here in Sudbury.
Jason, thank you very much for the introduction. I see from your news flow that you 10 days ago published a PEA on Crean Hill. It had a positive figure for a post-tax NPV and an IRR of 23% and a bit. It also had an alternative processing scenario with a much higher NPV and a much higher IRR. Could you just kind of tell me the background of doing the PEA on Crean and where it now sits within the portfolio?
Absolutely. So we acquired the Crean Hill property with the acquisition of Lonmin Canada. We closed that in November of 2022. And then shortly after that, we released the resource estimate for that property. And it came in, quite large with, in the indicated category between open pit and underground, about 31 million tons approximately combined. So large resource. We went out then to really answer a question with this PEA. So the question was, how much of this 31 million ton resource is actually mineable? Now, Crean Hill was a past producer, so it produced about 20 million tons historically. When Inco ran it, it shut down in 2001 and went into closure in 2002. And, some of this resource is in and around the old existing workings. Some of it is in new zones that haven't been mined before, like the 109 footwall. And some of it's in extensions of contact nickel deposits that were only partially mined by Inco. So, building up to that acquisition, we had been in discussions with many strategic investors, OEMs, and large mining companies. And we announced last year an MOU with Mitsui out of Japan, who's quite keen on what we're doing here in Sudbury, and we're still in discussions. But these were the questions they were asking us. Great resource, but we really need to understand how much of this potentially you put into a mine plan, because those types of investors are really keen on long life assets that can produce a lot, much less sensitive to, let's say, capital costs. Especially if they're in good jurisdictions with, permitting in place, like our Shakespeare project is. So that was kind of what we wanted to answer. And we hired Stantec to do the PEA, and that's what we really tasked them with, is go and look at this, and let's see how much of this can be mined.
Hang on.
So we set out to do that. Oh, go ahead.
Sorry, so just a really quick question. That between closing the deal and producing an updated mineral resource estimate was a very short space of time. Did you have to do a lot of drilling, and how did you compress that timeline?
So it was not took us many, many months, but the actual acquisition of Lonmin Canada, we were in exclusivity on the acquisition with Sibanye for many months as we were, working through all the steps to get to a definitive agreement. As part of that, we were able to take all of the drilling that was historically done by Inco when the mine was still in operation, as well as all the drilling that Lonmin Canada had done, which was about 90,000 meters of drilling between 2003 and about 2018. And so we took all of that and we put it together into a resource report as part of our due diligence. And then as part of actually being able to close, we needed to file a technical report and have that approved by the TSX. So that was in place, at the time of closing, based on all the drilling that had been done up until the time of our acquisition. None of the drilling that we've done since acquiring the property is included in this PEA. And I think that's an important part to speak to investors about and to understand, because although there's been a tremendous amount of drilling, and this is a long life mine, it operated for over 80 years with Inco. Even though all of that, there are still zones that were never mined because Inco was focused strictly on the contact style of nickel copper mineralization, not on footwall styles of mineralization. And we've actually recognized and started to drill out, two areas very well, the 101 footwall zone and the 109 footwall zone. We've also now identified this 105 footwall zone in between. So this type of mineralization, we see as being the real big upside in grade going forward in any kind of production scenarios.
Okay, so just, these things are really interesting because you've always got an evolution in an asset, but you at times you just have to kind of cut off data and kind of work with what you've got. So the PEA was essentially, sorry, dog barking. The PEA was essentially taking the data that was valid up to the point of the deal closing, which was Inco's data, Lonmin's data, and then wrapping an economic or technico-economic study around that. Is that correct?
That's correct. And this was really to continue to foster these discussions we're having with large strategic investors like Mitsui and OEMs and other mining companies that are interested in the nickel space, especially in tier 1 jurisdictions like Sudbury. So that's what we wanted to answer. I think the PEA was very successful in doing that. Now, you'd mentioned that we had also an alternative processing scenario, and this is where we wanted to examine at a very high level, and that's why we put it in section 24. It's not part of the base case, but take, similar philosophy with, some open pit mining, the bulk of the mining being done underground, but using the processing costs we had from our feasibility study on Shakespeare, which are much lower than a ore selling type agreement that we used in our base case, and say, if we had this lower processing cost, lower operating costs, which would allow us to even lower our, cutoff grade lower, what would that look like? Just from a Crean Hill perspective, not as an integrated study, but just from Crean Hill, is it warranted for us to look at a study to combine both of them? Or should we be looking at a life of mine optimized ore selling, complex, ore selling arrangement? And what I've identified and what I think the PEA has demonstrated is that it is worthwhile to continue to do another technical study to integrate both Shakespeare and Crean Hill. And, the Shakespeare project, as mentioned, it's a feasibility stage project. We have a closure plan, major permits, and an impact benefit agreement with the Sagamok First Nations to construct a 4,500 ton per day open pit mine mill and tailings storage facility. So it's a very strategic asset located here in the Sudbury region. And, combining that, which has in our feasibility study, 11.8 million tons of open pit reserves, with what we're seeing now, the potential at Crean Hill, could be a very long life operation. And that is what we're looking to do over the next, call it 12 to 18 months, is to complete that integrated study that really looks at what would be the optimal blend in the future, and under sort of what kind of production scenario would you have from Crean Hill and blending with Shakespeare.
Thank you. Just for my benefit, could you, and perhaps for the viewers, what is the kind of the order of magnitude kind of NPV figures post-tax for the feasibility study at Shakespeare?
Yeah, so post-tax, you're looking at, on the feasibility, at $850 nickel, we're looking at about 140 million Canadian. And so it's always been our vision with the company is to create a hub and spoke production model. And the permits for Shakespeare and the ability to build a mill right next to an open pit has always been sort of that strategic. And looking to combine, additional sources of feed to feed into that mill is really what we've been trying to accomplish. And I think with the acquisition of Crean Hill and Lonmin Canada, well on our way of executing that vision.
Now, I know it's overly simplistic to do it, but if you look at the NPV of Shakespeare at 140, and you look at the post-tax NPV of Crean Hill as a standalone at 230, and then you look at the alternative processing route, which was some degree of integration, that kicks out an NPV of 516, which is more than the sum of the parts is greater than the two individual components, essentially. So it seems, from where I'm sitting, that it's eminently sensible to study an integrated operation. And it almost kind of raises a bunch of questions, which include, do you have to go back and get new permits for Shakespeare? And what are the de-risking, the technical de-risking aspects of Crean Hill and the footwall zones to be able to integrate that into a further advanced study of the combined entities?
Some of what we need to do is metallurgical. So we have to look at, I guess, first of all, what is the optimal blend of those? Do we want to, put as much Crean Hill through as possible up front? And if so, at what grade? One of the, I think, benefits we have with these Sudbury type ore bodies is it's not a evenly distributed, disseminated style of mineralization. It is semi-massive to massive sulfides with disseminated halos that go out further into the hanging wall and the contact. So the tighter you are to that Sudbury igneous complex contact, typically the higher grade your nickel mineralization is. And, as you go out further in the hanging wall, you can make larger stopes, larger tonnages, but the grade starts to drop down gradationally. And then you have these footwall zones, which are, again, much different. They are often sharp-walled, massive sulfide veins in a breccia matrix where, you can follow these and in selective mining mine very, very high grades. And then you also have this style of mineralization like we see in the 109 footwall, where you'll have a higher grade core, and then you'll have, disseminated low sulfide PGMs out around that. So it really comes down to, we need to understand what is the optimal production scenario, production rate for Crean Hill to blend with Shakespeare. And maybe it is, for example, mining at 2,000 tons a day at much higher grades from underground, and blending that with 2,500 tons a day of open pit from Shakespeare and blending that in the mill. Maybe that makes the optimal economics. These are the things we'll figure out over the course of this PFS that we're going to be starting very soon, and the metallurgical work's already underway.
And
the other aspect of it.
Sorry, just on the sticking with the metallurgical side of things, you'll obviously need to. It's not just grade; it's blending as well. It's not just it's blending of the right materials, and presumably you'll do some work on ore sorting, because if you've got a trucking distance of 35 to 40 kilometers or thereabouts, the fewer tons you can truck, the better, presumably.
That's very intuitive. And we did not include ore sorting in the PEA because that work is just in the preliminary stages. There is an ore sorting system here in operation in Sudbury. So there's already been preliminary discussions about taking some of our, I'll call it potentially mineable material from our advanced exploration, because I hate to call it ore yet, it's not reserves, but taking some of that material that we'll be mining and running it through an existing ore sorter that's here in Sudbury. That's the best way to test it and really determine, what an ore sorting operation could actually, how it would benefit us. Because you're right, when you are trucking material, any distance, and then also paying to process it, the more metal you can have per ton, often, there's going to be an economic benefit. And so we believe, based on, the style and characteristics of the mineralization, the deposit we have here at Crean Hill, compared to the McCready West mine, which I used to run the operations for while I was with FNX, that is ore sorting now, very similar styles. We expect that we'll get fairly similar results to what they are, which is quite good. And that could have quite a material impact on how much rock, how much crushed, we'll call it ore, would be trucked to a future mill at Shakespeare. But as well, there could be some big benefits in actually increasing the grade further and trucking less material and paying to process less material at a third-party mill here in Sudbury. Because I think any scenario that we look at is going to involve a period of time we will be trucking ore to a third-party mill. And as we ramp up, let's say in the underground, after our advanced exploration, assuming it goes successfully like we would plan, we would just continue ramping up shipping, again, we'll call it mineable material, to a processing plant as we're better understanding reconciliation of our mining stopes, our dilution to the block models, to our estimates, there's going to be a period of time. So if we can reduce the amount of waste that we're sending and increase the amount of metal in every truckload we're trucking, that's going to save a lot of money, and I think it'll have some really positive economic benefits. But that test work still will be part of our advanced exploration, and it hasn't been done, so it wasn't included in the PEA.
Good. Now, sorry, I interrupted you. We were just about to answer my earlier question about permitting.
Yes. So on the permitting part of it, so right now we have all the major permits in place at Shakespeare, like I said, approved closure plant. Most likely our strategy is to, when it is time to start construction, we'll start construction as per our closure plan. And that's sort of the key thing. While we are working on, figuring out exactly what the right blend is, we'll be doing the geochemistry on the Crean Hill, mineable material to determine if there's additional water treatment needed. We'll be looking at things like, if we are hauling mineable material from Crean Hill to Shakespeare, is there an opportunity to backhaul classified tails from Shakespeare and deposit those back underground as backfill? Because that is, typically one of the best forms of backfill material is tailings using, the paste fill technology. So these are the things we'll be looking at, and all this will go into future updates. Before we'll be able to actually truck ore out there to Shakespeare, we'll need to answer the questions, because the same as if we expand the reserves at Shakespeare itself, what are you going to do with the tails? How much capacity you have for waste rock? All those types of things need to be amended in your closure plan. So yes, there's going to be some additional work to be done, but that will not stop us from starting construction as per currently what is permitted.
Okay, good. If I read that, if I hear that correctly, you don't have to start from scratch. It'll be amendments as you go along, rather than having to reinvent the whole process or redo the whole process.
That's right. It would be, the same as basically every successful mining operation starts with a certain mine life, and then they expand, convert resources into reserves, extend the mine life over time, and then amend their permits and their closure plan to, accept more tails, more waste rock, longer mine lives, sometimes bigger footprints. It would be the same type of amendments, so it's pretty straightforward. But the overall concept of where we would store waste rock, where we would discharge water, the plant location, all those things stay the same. So that's what takes time.
Good. I'm also kind of hearing that the next kind of objective is to do a pre-feasibility study on a combined entity, but also staying alert to opportunities for toll treating, possible ore sorting. So it is to advance the combined project, the hub and spoke model that you've spoken about for a long time, to take it to that next stage. Could you give me an indication of kind of timelines and some of the key work streams in addition to the metallurgy that you've already spoken about?
So I guess just to step back one bit. So there's going to be a couple things running in parallel over the next, call it 18 months. A huge de-risking for the project, and I think an opportunity for the project, and one that we're very fortunate because of the brownfield nature and where we're located, is to actually start test mining from underground. So this advanced exploration program. So we've already amended a draft closure plan. So Crean Hill has a closure plan right now. We've amended that. It will allow us to do the advanced exploration. So basically, what we have put in there is the ability to process or to test mine 400,000 tons from the Crean Hill mine from underground over a period of 2 years. And that gives us lots of optionality on, how we want to test mine this, where we want to test mine it in for, a lengthy period of time, more time than we probably need to make a decision whether we want to move towards commercial production or not. So that has been already drafted. We are hoping to have, some positive news on that in the next few months. So that should be in Q4. We should have all of that, be able to talk about it, because it is a very simple process. It is simply an amendment to an existing closure plan, And because there's no permanent facilities being built, it's quite simple. Other than we're going to put in a new portal and ramp from surface, and then bring in some portable crushers in the sample tower. That also allow us in the very short term to allow us to do a bulk sample, which we're estimating will be about 15,000 tons on surface in the 109 area. And that would be material that we've done some tightly spaced definition work on to determine, the high grade structure that's running through the 109 that's not well represented in the block model. So we want to be able to estimate that from our tightly spaced drilling, take a sample, reconcile that against the existing block model that's in our resource and that was used for the PEA against what's actually going to be mined. And this, again, will give us information how we want to test mine in and design test stopes underground. So all of that can happen. We believe we'll have all the approvals in place to do that before the end of the year in Q4.
Now, you say that's a an opportunity, and it gives you optionality. It's relatively unconventional in the sense that many mines don't go through a 2-year period of test mining 400,000 tons. Yes, it will give you confidence and give you certainty on how the ground conditions are and how to develop the stopes, and you'll get a better understanding of kind of metallurgy, and you'll get a hands-on view of the presentation of the geology. Plus, you'll get the metallurgical information and the assay data from the bulk sample, which is all good. But it's an extra cost, isn't it? Because you're still going to have to do the wider space drilling. You're still going to have to do the conversion of inferred resources to measured and indicated. Was it always? Yeah, I'm just kind of a little bit. It's an advantage, but it's a double-edged sword, perhaps.
So there's been about 90,000 meters drilling by Lonman and a lot of drilling by Inco before that. And as I mentioned earlier, of the resources that we reported last November, 31 million tons are in the indicated category. So there's not a whole lot of conversion. The conversion from inferred to indicated, that is mostly at depth, and there's not a whole lot of it. Where it gets, I think, interesting is in these footwall zones where you have these sharp-walled veins, and you have these systems of very, very high grade, sometimes nickel, copper, and PGMs that can move and jog and go wrap around blocks. That's where, even with relatively close 15-meter spacing, sometimes it's difficult to block model it. And the best way to do that, and this is based on my experience working with FNX Mining, developing multiple footwall zones that FNX discovered, including the Levack footwall, which was later named the Morrison deposit. When we first went in there, when I took over at operations at Levack Mine, that deposit, it's sharp wall, copper rich type mining in the footwall of the Levack Mine, estimated around 6%. We kind of estimated where we were going to start mining. But when we got in there, we selectively mined it. We recognized these are sharp walled veins that are hard to represent in cubical block models. And we mined it at over 10%, month after month after month after month. But, until you get in and you still out a few levels, it's very difficult to make that reconciliation. This is what we want to do in some of these footwall areas. Now, this is not an extra cost. Once we are completed, to transition, and maybe we say after 1 year of test mining and development, we are just going to start ramping things up. We're going to amend the closure plan again. We're going to incorporate a much bigger plan, because I think by then we'll have a very good understanding of what is the optimal production rate, what is the optimal cutoff grade, to maximize the economics of the project and the life of the mine. We might all determine that in the first 12 months. But what we've done is given ourselves enough leeway that as we're ramping things up, like in amending the closure plan for the longer mine life, we'll have maybe another year to do that. So then we just gave ourselves some cushion. Typically, I would expect next year, we're going to get into ramp development cut into the 109 footwall area, take out a sample there, ramp down to about the 100 meter level, about the 300 foot level, do some test mining in the intermediate zone as well as the 101 zone. And, after that, continue to ramp down and then sill out on a number of levels, these different zones, so we can really start well-defining what we're going to do. Now, as we're doing that, we're going to be cutting into some areas and developing along these veins and these zones in material that we have drilled, such as in the 101, where we've had wide areas. Hole number 5 that we released last January, we had 31 meters at an average of 4% nickel. So very wide, very high-grade areas. And we are going to go in and test mine these areas because they are not only some of the highest grade areas that have been drilled in my experience here in Sudbury, but these are also some very near surface areas that can potentially create some very early significant revenues in any kind of production plant. So these are the kind of areas we're targeting. Once we decide we want to start ramping up, and we've opened up areas of the 109, areas of the intermediate zone, areas of the 101, it really allows us to start producing very quickly and potentially, some very high grade mining areas. So that's sort of the plan over the next 18 months. And again, as we continue to take bulk samples, test stopes, we'll be able to reconcile against that. And I think then, we'll recognize, I think the market will recognize what we're seeing is that we're very fortunate to have such high grade so near to surface and easily accessible to mining. As we're doing that, we will be doing the test work for the pre-feasibility study and looking at a bigger plan.
Yeah. Okay. So, that's basically what I was going to say. It sounds as if you've got two kind of the key objectives at the moment. One is doing the optimization, the scheduling, the integration of all of the planning for a hub and spoke large operation, and getting the scale right and the various components which may or may not involve ore sorting. And at the same time, you're doing the kind of the practical engineering, the practical mining aspect of it, of actually getting underground, seeing how things work, pulling out some high-grade material. Which leads me into kind of the question about your team and balance sheet eventually. But let's talk about the team first. Have you got kind of an in-house team that's able to work with Stantec on presumably they're going to do the next phase of the study as well? Have you got the in-house engineering capability to drive that process and do the underground work, or are you in a kind of a recruitment drive stage at the moment?
Yeah, so we do have a great in-house technical and engineering team. Dave King, for example, who's our Senior Vice President, Technical Services. I've worked with Dave for many years at FNX Mining. Again, he's a local Sudbury person who really understands these types of operations, these restarts. But we will use a contractor. It'll be contract mined and contract developed, for the entire Advanced X program. That brings a lot of de-risking in itself. So there's a number of established mining contractors that are here in Sudbury that, have done this kind of work, and it's a very simple mobilization and getting things started with local workforce. So, we're not going to be hiring, a team to get the Advanced X going. Now, on the actual pre-feasibility study, we do have, an excellent metallurgical engineer that's working on this with us. We have a chief engineer here who's in charge of, working with the mine design. I expect a lot of the work we're going to be doing will be leading it ourselves, especially in the trade-off studies on different throughputs. We can do all of that ourselves and work through it. So we haven't awarded, and I don't expect us to award the consultants that'll do the PFS this year. We probably won't award that until after the new year, primarily because we're doing a lot of work ourselves to kind of scope out exactly what we want. And that's the cost-effective way to do it. And when you have the in-house expertise, it's the right way to do it.
Yeah, good. I will come to balance sheet, but again, another pre-question about your shareholder base and your shareholder register. When you speak to the institutions on your shareholder register, what are they looking for? Are they also aligned with this plan to go for the larger model? I mean, you must have spoken to them in the last 10 days or so, if not before.
Yeah, we speak to our, especially our significant institutional shareholders quite regularly. The reason people have invested in what we're doing is a couple reasons, I guess. But one is they believe in the team and they believe in the vision we have here. It's very rare that you'll see a junior company that can be in a position where, for minimal capital can actually move forward in production and have, permitting, I would say, as de-risked as you can ever have in this industry. Having really months away from having everything in place to do advanced exploration at Crean Hill, and then with Shakespeare being in a position with approved closure plan, IBAs in place, which is huge. Like, having support of our local First Nations is huge, and I think we have some of the best partners in First Nations locally that any mining company could ask for. So yeah, our institutional investors, are obviously want us to pay attention to, cost of capital and, not take on any kind of risks that, are untypical of a junior company. But yeah, they are supportive of seeing, can we actually bootstrap into production like FNX did? And although the PEA doesn't truly take that approach, it's not, can we start out small, get in, do some test mining, create some revenues, use those revenues to reinvest in more development, open up more levels, and get to a production rate where it's cash flow positive without having to inject a lot of capital. That's not the PEA. The PEA is really catering to large strategic investors like Mitsui and OEMs who are interested in, if capital, if you wanted to invest 50, 100, $200 million in capital, how big could this be? Because that's what we cater to. But being a junior company, we tell the story and tell our investors that, we believe we can bootstrap this. And again, one thing we haven't talked about at all is our institutional investors are very keen on the exploration potential. So we've talked a lot about PEAs. We are not just a development company. I would say first, we're an exploration company, actually. And speaking to advanced exploration is what we want to do next year. Again, back to the team we have, which is largely, former FNX colleagues. At FNX, yes, we brought McCreedy West into production. It created cash flow. We also made 3 major discoveries in the Podolsky 2000 deposit, in the Levack footwall, and in the Victoria deposit, which right now in Sudbury, KGHM is developing. It's a world-class nickel copper deposit. So, exploration is going to it's going to still be a major driving factor, I think, in years to come, both at Shakespeare and Crean Hill.
We're going to have to park exploration to one side because the market at the moment isn't paying for it. But I am an exploration geologist at heart, and I will, excuse me, I'm an exploration geologist in heart, and I will love to talk about exploration, but we'll have to save that for another time. Just in terms of the kind of your balance sheet, and also this your description of the PEA being kind of for a large project, but the capex on it, the initial capex is only $80 million or $81 million, with yes, substantial sustaining capex along the way after that. But is it not possible to bootstrap into kind of a combined entity? Because I saw that the alternative PEA had the alternative scenario also had the similar upfront capex, which is very manageable.
Yeah, and again, just to be clear for everyone, the alternative scenario does not include any capital costs for Shakespeare. So Shakespeare needs to get built. So that's again what we'll look at in the PFS is how do you combine them together and what is the combined capital costs. But yes, there is an opportunity to bootstrap and through taking a higher cutoff, focusing on more of the high grade at lower tonnages, the higher margin material we could ship to a third party mill, that we believe that, we could be in commercial production and underground at Crean Hill through third-party processing in 2025, and that could create some significant cash flows. And of course, being a cash-flowing company, then the ability to, project finance Shakespeare becomes much easier. And when you combine that with the Canadian government's 30% tax credits towards critical mineral projects and capital development, combine that with potential for U.S. Department of Defense grants that we've applied for, and then potential cash flow, which can allow for lower cost debt financing, potential sale of an offtake to a strategic partner. That, again, is one of the key reasons we did this PEA in the first place. All of those things could make the project financing much easier. On our balance sheet, as of March 31st, we had over $20 million cash. This year, we're looking to spend about $7 million on exploration, and that will facilitate over 20,000 meters of exploration drilling between Crean Hill and Shakespeare. We would expect to have a similar budget for next year, fully financed from cash in the bank. So again, even though I think that broadly speaking, the market isn't paying for exploration, when you can have potential to discover, rich footwall deposits on properties that are already permitted, I think there still is an appetite for that, and we're still very keen on exploring where we think we can make new discoveries.
Excellent. Thank you. And I know we must wrap it up soon, but one final question, if I may. When do you expect to make a decision on the underground development, the 400,000 ton, even though you might not do all of it, but when do you expect to kind of reach a decision? In a sense, that's a key, kind of a pivot point for the company. A, you'll need to raise money, and B, it will unlock the footwall zones.
Yeah, and again, we may or may not have to raise money for that. And when I say that, we do have some options to finance the initial start of that, and we can scale that advanced exploration back as much as we want. But we still need to get definitive terms from a third-party mill here in Sudbury. That's underway. I'm hoping that'll be completed, early Q4. We still need to get the approved closure plan filed, which again, I'm hoping Q4. And we still need to actually go underground and execute like we want to. We'll have to get our permit to take water to dewater the mine. And that is a fairly simple permit, because there already is a permit to take water, to take water from an old pit that's there, as well as just off our property, as well as to dewater the runoff from the site. And it's going through an existing processing plant that Vale operates. Our permit to take water would be just pumping from underground to that same water treatment plant. So, that will take, we're hoping, 3 to 6 months. But once we have all those in place, we would conduct our surface bulk sample at 15,000 tons in the 109. And then, we would make a decision after that to commence with the underground development. So call it the first half of next year. But yeah, we do have a few options on how we want to do that. And again, based on the results of, this surface bulk sample, we have about $14 million in warrants that are in the money. Half of those being held by our two largest shareholders. So, we do have a few options on how we want to proceed with that. And again, if we decide to just limit it, let's say capital is very hard to come by. We don't want to raise any money. We have plenty of money next year to execute all of our exploration plans plus our G&A. We could look at saying we just want to go down and start with advanced exploration in the 109, which would be, scale that exploration back down by probably, or the cost of the advanced exploration by 75%. In the $48 million that's in the PEA, there's $8 million of contingency built into that. So, and it's going all the way down to the 550-foot level. So there's a lot of room to work within that to reduce that cost to something that's very manageable. And again, we'll look at this with the bootstrap approach. As we get more results in, from our drilling in these areas will better model exactly what that advanced exploration plan will look like. And again, but we'd be looking sometime the first half of next year.
Jason, thank you very much. I've learned a lot about the company in the last half an hour or so. Good luck with getting the definitive terms on the mill and the amended permits and the water permit, and hopefully that can take you into some high-grade advanced exploration underground. And in the meantime, keep the exploration results coming. Get those exploration geologists working hard and discovering new zones of mineralization. Good luck.
Absolutely.
And
Thanks a lot, Merlin.
No worries. Thanks a lot.
Take care. Bye.